Let's take a look at this question. Pocono is issuing debt to raise capital, so not equity, and here we are dealing with debt. Which of the following would be correct regarding the cost of debt to Pocono? Well, 1, if the market interest rate are higher than the coupon rate, Pocono's cost of capital will be reduced. So what we're saying here, if market rate, if what the market requiring is higher than the coupon rate, okay, we're saying the cost will be reduced. The cost of that will be reduced. So let's take a look at the market. If the market is requiring 10% and you're offering the coupon rate, the company is offering 8%. What does that mean? It means the company is issuing a bond, offering a bond to the market, and they're telling the market, we're willing to pay you 8%. The market is demanding, based on the current interest rate and market condition, it's demanding 10%. What would happen? Would the cost of debt will be reduced to Pocono, or would the cost of debt will be higher? And the answer is the cost of debt will be higher. What does that mean? It means when the company wants to issue the bond, they're going to have to sell the bond at a discount. Discount means they're going to get less money than what they want. Why? Because they are not competing with the market. They are paying less than the market. Therefore, their cost of debt will go up, will be higher. Okay? Therefore, is statement 1 true? Statement 1 is false. Therefore, if statement 1 is false, I can immediately take out A, I can immediately take out C. Now, all what I have to know now, if a statement 2 is true or not true. If it's true, the answer is D. If it's not true, the answer is D. Because interest expense is tax deduction, so far so good. Interest expense is tax deduction. The cost to Pocono is lower than the market rate on the market rate on the debt. Is this a true statement? And the answer is yes, because the cost of, let me just erase all of this. So let's assume, and let's go back to 8%. If you're offering 8%, it's going to be less than the market yield. The market yield, whatever, let's assume the market yield is 8% as well. Your cost of capital will be lower. Why? Because what's going to happen is you're going to take the 8% multiplied by 1 minus the tax rate. Why 1 minus the tax rate? Because the 8% that you're going to be paying, it's going to give you a tax deduction. So if it's 8%, and let's assume your tax rate is 30% minus 0.3, which is you have to take 8% times 0.7, and you can find out your net cost, net of tax, your interest cost net of tax. So 0.08 times 0.7, that's going to be 5.6%. So your rate, your cost of capital is 5.6%. That is a true statement. B will be the correct answer. So remember, make sure you know how to compute your interest expense net of cost. So your interest expense is 8, since the tax rate is 30%, net of tax is 5.6.
Want to see more CPA exam multiple choice questions solved step by step? At farhatlectures.com, you will get hundreds of video solved MCQs step by step, including previously released AI CPA questions, previously released AI CPA simulation, in-depth lectures and resources to prepare for the CPA exam, AI tools that's going to help you study smarter, not harder, CPA exam podcast lessons where you can learn on the go. And also you will get the personal guidance of support of Farhat and his team. If you are serious about passing the CPA exam, this is your next step. Visit the website farhatlectures.com, start your free trial, and I hope to see you on the website.